Hey, use your phone. Can you see PJ Investment? Am I live or not?
Can.
Hey, can you live it, live it. Okay, never mind. Sorry. Finally, I got it. Wow, finally. Okay, got it. Wow, this one really use under warm blood. Can. I'm here. I can monitor. Thank you so much. Mic test. Yeah, you can turn off that one. Mic test. I think we are good to go. Okay. Okay. Hey, hi everyone. Hey, sorry for being late. I know I was trying to figure out some OBS stuff. No, we are supposed to start at 9, so it's a bit of delay, okay? But no problem, we will start right now, okay? So thanks for everyone who dropped by in, and hopefully can see familiar faces, that who attended yesterday's stream. So today we got about 3 to 4 topics to cover, same thing. We will keep it to about 1 hour, and then we will stop there. So half of the emphasis is on options trading, especially for today's. Okay, then maybe the last part we talk about a bit of my story about some other elements I use to quickly build a huge portfolio in order to retire. Okay, so that's pretty much for today's stream. So let's start. Okay. Okay. So today I want to talk about is about options closure. Okay, I know I did a short earlier about when to close your options contract. So today just want to build on it, and as well as to talk more about why I close options and rather let it expire. I know, right? Let's say you sell a put contract or covered call cash cover put. If you wait till the entire duration, maybe you get like $300. Okay, but if you maybe close at 50%, right, you only get like half of it. Like instead of a $300 profit, you get $150 profit. Okay, why do you want to close the option contract early as compared to letting it expire? Okay, I mean some people have different theory lah, but in short it's about risk management or capital efficiency. Okay, so example, you sell a 1 month contract. Okay, I know this is my short, I just repeat a bit, quick recap. Okay, you sell a 1 month contract, but for $300 premium. Okay, you collected $300, but in the first week you already capture 50% of the premium. Okay, that means you already earn $150 for your contract. Why would you want to wait 3 more weeks to earn the remaining $150? It doesn't make sense. Okay, the risk reward ratio just not there. So instead, why not just close the contract? 1 week you earn $150, close it, then you take the money, you keep it, and you are no longer bound to this contract, right? Then you can sell another contract, be at whatever prices you want to. So that's really about capital efficiency. Now the risk management element part is, you must know, no doubt your contract now is valuable, it's worth $150. Okay, if you wait 3 more weeks, anything can happen. Okay, I can tell you, options contract swing and change faster than you change your underwear, because I know some people don't change underwear for 4 days. Okay, so options, the prices swing very wildly and the volatility spike is insane sometimes. So you may be profitable this week, you're up $150 for your contract, but who knows how within the next 2 weeks, right, something happen or there's some negative news, suddenly your contract turn negative, you become unprofitable. So that's why, right, personally, not financial advice, don't call the police on me. Okay, if there's 50% profit margin, right, I will just close the contract, and then if I want to continue to have more contracts, I'll just sell more. Okay, that's personally my take. Okay, Now to add on another element is, for this type of option contract, it's not always a must to do it at 50% profit margin. So give and take. Sometimes, right, I will also close at 40% or even 30%. But usually, I mean, for longer term contracts like be it like 1 month, 45 days or more, right? I will want 50% for the good risk reward ratio. But if there's some like potential bad macro factors like economic downturn, Trump start a new war, he has what, labor tariff, right? Next time he got God's tariff or whatever. So when things like that happen, when I look at the macro situation, right, I wouldn't be greedy. I will start thinking about closing my position at even 40% profit margin. Okay, of course, 1 DTE, when I trade 1 DTE, that's a different story, because 1 DTE, you only have technically 2 days before the options expire. That one, the profit margin is much lesser. About 20% I will close it, okay, because of volatility. But for those like there's 1 month and above, right, I'll aim for at least 50%. But if there are some form of like potentially bad news, that kind of stuff that I can see, I can hear, even 40% margin, I will take it, okay? So remember, the whole idea of selling option is not to get rich quick, okay? It's about risk management, cash flow, and also being consistent, to consistently generate, income and profit. Okay, so that's the whole idea of selling options, why I choose to close option at a earlier, just 50% profit, rather than trying to wait for the entirely let the whole option expire. I mean, it's not wrong. You can have your own strategy. I mean, it's really up to you. But personally, the whole idea of option view strategy is to try to avoid assignment. I mean, you can take assignment if your strategy is about taking up the stocks, okay? But personally, I try to avoid assignment unless needed. I want the shares, so that I can keep having this amount of capital in my hand to keep cycling over and over again. That's why it's called the wheel strategy. It keeps going around. Okay, as long as you can avoid assignment, just avoid, so you can keep farming the premiums. Okay, or they call it theta, time decay, all these things. Okay, so that's mainly why I choose to close options earlier. Okay, I'm not saying you must do it, okay, but like I said, option view strategy is about risk management, capital efficiency, and we are not here to get rich overnight. We want to make money consistently. So that's why risk management is an important element. Okay, don't always be greedy, want 80% profit margin, 100% profit margin, sometimes 40 to 50%, or even 30% is good enough. Okay, so I hope that gives you a more in-depth explanation about why I close options contract earlier. Okay, especially cash cover puts. Okay, I know my short I talked briefly, but not so in depth. So I hope that this particular sharing, right, give you more depth, and not just 50%. Sometimes 40-30% also can close. Okay, depending on the macro situation. So selling options, right, to be sustainable, consistent, cannot only just look at the micro, which is the company fundamentals. You must also look at the global macro factors, like the economy, Trump doing anything funny or not, is he going to whack another country, that kind of stuff. So all these are elements to bear in mind. And I feel like, okay, if you do all these trades more, the more experience you get, you will tweak your strategy here and there. Eventually, you will find a good balance on how to get good amount of profit without taking too much risk. Okay, I mean, no point if every contract you sell, you close at 5-10% profit, right? I mean, yeah, you will have a very high win rate, because 5-10% I close already. Maybe I earn like $5, $10. But what's the point, I put in like what, standby 10-20K for cash cover put, but I only earn like $5-10 each time. Once again, risk reward ratio not there, you see. So we want to take a decent amount of risk without overexposure, but at the same time a decent amount of return. Okay, so that's the trick of the option view strategy. Okay, so hopefully that has given you all some value, hopefully. Okay, so let's see. Okay, let's see some chat. Hey Yaf, good to see you again. Good evening. Hey, sorry Yaf, by the way, like I said, I should start at 9, but I was late like 9 minutes because I was figuring out this microphone part, you know. The microphone like couldn't sound, then I don't know what went wrong. I don't know, close, restart here and there, eventually go one round, shoo. I figured it out. Okay, so I'm late 9 minutes. Okay, my bad. Okay. Hey, good evening, by the way. Yeah, how are you? How are you doing? Had your dinner? What you had? 867. Hi. Black 34. Hey, nice to see you. So. Okay. Oh, Black, by the way, first time see you, right? First time, yeah. Okay. And okay, so hopefully can see more of those other previous people who came by. So hopefully they are free, they can drop by later. Okay, so next up, right? Hopefully I share more about these options, particular price closure. You know why I choose to close earlier. It's really, like I said, I want to be consistently making money, not just on good times, you know, be it down times or trending sideways times or the lost decade, that kind of time, right? Prices trend sideways or whatever. I want to still be able to make money if possible. So that's why I will close options at 50% profit. Okay? Okay, next up, to build on the options, right? So I receive comments, okay, messages and ask me, right? I am new to the stock market. Can I start trading options or not? You know, so these people are totally new to the stock market, okay? They have never been vested at all. They never buy shares before, never hold. And then they ask me, hey, how do I start? You know, what should I do? So personally, once again, not financial advice. Don't call the government authority or whatever, you know, money, all this on me, okay? Personally, my take is, if you're totally new to the stock market, right, don't touch options first, okay? It's better you just buy some stocks and then hold and then try holding it first. Because, right, if you had never been vested in the market before, you never experience up and down, that kind of stuff, right? Like you buy, then the market go up, go down, you know, you got a heart attack, that kind. You'll be very, you'll panic. Okay, like a beginner, totally new to the stock market. When you see a stock price drop, right, you will panic one, and then you want to sell because you're scared here, scared there. And then when go up, maybe you are greedy, you want to quickly take profit, but it goes up even further. So that's what I personally take. My take is, you want to trade options, can, okay, but you should be at least a bit more seasoned in the stock market. Preferably at least, you know, 6 months or even 1 year, you know, in the stock market. Best if you have been through up and down cycle, not just up all the way, you know, at least up and down, that kind. So you have the experience and the, you know, ability to manage your emotions when you come to this roller coaster ride, you know. Market go up, market go down, you know, you personally experience it. You know how is it like, you know, how you feel, you know, you're scared, but you're able to manage your emotions and you also better understand the stock market. For example, you believe that, oh, ETF, any ETF like IWD, SPY 500, you know, or even QQQ. Okay, you feel, hey, ETF is a mixture basket of stock. No doubt it drops down, but long run it will recover. So I'm convinced I will keep holding. So you know, all these elements plays an important part, you know, to build out your experience, you know, your veteranness, okay, your, or should I say your being seasoned in this stock market, so that you know that all up and down is normal. Okay, stock can go up, stock can go down, it's normal. And I believe that, you know, because this company or this ETF is something I want to hold long term, yeah, I will hold it. So throughout all this experience, right, it will set you up for the options trading part. Because I tell you, if stocks can go up and down like Nvidia or even Alphabet, one day can drop 7%, that kind. I tell you, options are one day can go up down 20-30%. So it will make you panic even more, okay? So that's why if once you are seasoned with the stock market, you feel, hey, I'm used to it up and down, then when you move on to options trading, right, it will be quite ideal. Okay, because when market fluctuates, right, you don't really panic so much. You will think with a clearer mind and then you will position yourself correctly. Okay, so option selling is not like what some people like to sell calls, they promise option selling, sure win strategy. Bullshit. If got sure win strategy, you tell me. I all in everything, okay? So option strategy, right, actually, it does, and it is risky, okay? There are elements of risk. If you don't know what you are doing, Okay, especially option selling, you know, if you don't know what buttons to click, right, like you accidentally click too much, or you know, sold too much overdraft or whatever, you know, you sold too much contract without knowing it, or you overshot or whatever, that kind, right? Or you select the wrong DTE, end up one DTE you selected, then it expire worthless. So that can cost you a lot of money. And if you're new to the stock market, right, you'll probably be trying to figure out your brokerage account, how to click here, click there, how to even buy or sell, how to even deposit money inside. Especially IBK, wow, when I first used, I really vomit blood. The complexity is really high. So personally, okay, for those who ask me this question, if I'm new to stock market, should I start option? How to do it? Personally, okay, not financial advisor. I'm not here to tell you to do what. Okay, it's your money. You spend however you like. Okay, personally, if you're new to the stock market, don't touch options first. Okay, once you're seasoned, you buy some, sell some, or hold some here and there, then you get a hang of it. Then I think maybe about 6 months or one year, even 1 year, or even 2 years, okay, then you want to transit to option selling. I think that will be probably a better timeline. Okay, so yeah, that's my personal take now. Okay, so for those who are keen in option selling, you might want to gain enough experience in the stock market first. Okay. Yes, Samuel or Cai Fan. Okay, just finished night call for work. Okay, what are you working as? I hope your Cai Fan add fish. Okay, hopefully your stock market been, you know, giving you good returns, and then can add some fish or add lobster. Nowadays, you know, Cai Fan. Okay, in case you all don't know my US friends, okay, Cai Fan is like an economic dish in Singapore. It's where you get a plate of rice and then you tell the boss, right, whatever vegetables or meat you want to add. Then they'll stack all the dishes on, right, like buffet like that almost, but then you pay a price based on the number of items you take. Okay, nowadays Singapore Cai Fan very premium. Got salmon, teriyaki, whatever, even got beef, you know. Wagyu beef. I think, I don't know where is it, but it's a premium Cai Fan. Okay, easily can cost you like 18 or $20. More expensive than the nasi padang, you know, Singapore Malay version of the Cai Fan. Okay, economy rice. Okay, hope you add fish. Yeah, hope you get to add fish or even add lobsters. Okay. Okay, next up, okay, so the market will open in 5 minutes time. So when the market open, right, maybe we go take a look and then we discuss a bit about some of the positions, and then hopefully the market, if it's ideal, let's do some trades. Okay, so let me change the scene now. Okay, so I put the options on top. So in case you all want to know, right, my options holding is in the first picture on top. Okay, first picture on top. Okay, so you can see I have quite a bit of holdings. Okay, so market open in a while, so after that, you know, we will see if there's any opportunities, and then we also discuss the price movement of it. And then, like I said, I'm very excited this week because Apple and Microsoft are releasing results. Okay, my top 3 holdings are Apple, Microsoft, and Alphabet. So Microsoft and Alphabet will be dishing out results this week. Okay, so if you see my holdings, my put options, right? Okay, you will realize I have a lot of Apple, Google, and Microsoft. Okay, so one very important lesson I cannot emphasize enough is only sell options. Okay, I know I say it before, but let me just say it all the time. Only sell options on company you want to own. Okay, don't try to be greedy and try to sell sell options on companies you don't want to own, because trust me, no matter what strike price you set, okay, I used to set strike price at 0.1 delta, very far, okay, from the stock price. I still get assigned, you know. So that's why you cannot escape one. If you sell enough contract, there comes a day you will be assigned. Okay, so if you sell options on stocks you want to own, right, when you get assigned, you'll be happy because you get to buy the share at the discount, right? So it's okay, especially on good companies, you know. Like example, Apple, Google, Microsoft. Example, this here, what I have, okay. You know, I'm quite convinced that, yeah, even if let's say there's a sharp drop and I got assigned, right, long run, it is more likely, okay, that the stocks will recover, and then I will be able to sell contracts again, okay, and I don't want to get stuck with this stock at the low prices. Whereas, example, you look at all the companies like Neo or GameStop, very famous GameStop, right? The IB premium was very high, 90, 100%, sometimes 120%, okay? The premium was insane. But if you got greedy, you choose to sell cash cover puts on them, right? And then you get assigned GameStop, get assigned Neo. Then now they crash so much, easily what, 30, 40, 50%. Neo was like a $50, $40 stock. Now it's like what, $10, $20? GameStop was once what, a few hundred. Now I think 40 or 50, I can't remember. So when the market crashes, right, or your stock crash, right, and it doesn't recover, right, your stock will be stuck and you can no longer sell, cash cover puts on them. Let me just give you a quick example. Neo, let's take Neo example, okay, NIO, okay, a China EV company. The premium back then was very juicy for selling contracts on them, options on them. So example, let's say you sell one option, okay, on Neo, you get $500 premiums, okay, but the stock price itself crashed by $20. So your loss total is $2,000, okay, because you hold 100 shares, right? So $2,000 minus the 500 premium you collect, right? You are still down $1,500. Okay, so must be very careful. Okay, so that's why I always emphasize sell stocks on companies you want to own. I assure you are selling stocks. Selling options on companies you want to own. If you sell options on companies you don't want to own, like New or GameStop, and then you can stuck, right? It's almost like checking into Hotel California, okay? Like they say what, you can check out anytime, but you can never leave. So you get stuck with the stock almost forever. And there comes a point, right, you decide whether to cut loss or not. So that's my take lah, okay? Once again, not financial advice. You all decide how you want to spend, okay? But my rule is that always only sell options on companies you want to own, preferably good companies. Okay, next up. Okay, so market has opened. Let's just go look and see if there's any opportunities. Okay. How should I do this? Okay, I just drag on. Okay. Wow, looks pretty green today. Let me see, okay. Okay lah, Apple also up, so let me see. Apple is up 1.3%. Okay, so one rule of the thumb I also want to emphasize is that usually, right, I only close, preferably I close options, right? Like I say, target is 50%. So my Apple put right now, if you see, right, I'm not sure you can see. By the way, this is only my second official stream, so sometimes, my video or picture may not be very clear. Okay, so I will improve. Okay, give me some time. Okay, so example, I see my Apple, right, is 36.62% the profit margin. Okay, so usually, like I said, I would prefer to close at 50%, and no doubt the earnings season is coming soon. So just to be clear, I try not to hold any short-term contracts on companies that are reporting earnings soon, because that's very volatile. But because my Apple put is like 2027 March, so that's like what 9 months, 6 to 9 months away. So longer term contract, I don't mind holding over earnings season. But when it's like a 30 days or 45 days, that kind of contract, I will avoid earnings season, okay? I try to close before the earnings. Okay, this is very important. One strategy is that always remember during earnings season, like the company announce their quarterly earnings, prices can fluctuate heavily, okay? Like I said, my strategy here, okay, is to consistently make money. We want to manage risk. No doubt, okay, it's volatile, you can potentially make more money, but you also can lose a lot of money. We want to avoid that, okay? We want to consistently make income. So that's why earnings season, best to avoid. unless you're holding long-term contracts. Then even if there's earnings, it doesn't matter because you have a longer leeway for the price to eventually catch up or go back up again. Okay, so honestly, I'm really looking at the SPY put that I can do for a year because I don't really have it. Okay, wow, SpaceX now 100. What, SpaceX down 4% already. Oh. You know the IPO price says SpaceX was like 135, you know. That's why honestly I don't dare to touch SpaceX until it hits about maybe 50 to 75. Okay, Nvidia is still down, okay. Potentially a put option on Nvidia, potentially. Okay, like I said before, I only sell cash cover put when the stock price is down so that the premium is higher. Okay, and I will do a sell a covered call when the stock price is up so that the premium is higher. Okay, that's a general guideline. Okay. Okay, so SPY, okay, we can see here, SPY now is down about 0.1%, so nothing much to be honest. Usually I'll prefer SPY to be down at least like, 0.8 or even 1% before I do a put option on it. Okay, I'm very keen in the SPY put for 1 year because I don't really have it. And like I said, mid-term, right, mid-range, okay, the duration, like 1 year, okay. I foresee that SPY should at least minimally trend sideways or even go a bit higher. So that's why if I sell a cash cover put that is a bit far strike price or even 0.2 delta, right, I'm quite confident I will be safe and I should be able to collect the premium. High chance, high probability or high safety margin, I would say, because that's my personal take now. Because like I said, you have Donald Trump now in the position, and Trump is a businessman. He will push whatever it takes to get the stock market rally. And he also said before in the past, he wants Dow Jones Index to be like 80,000 or 800,000. I can't remember now. Okay, so that's why I'm quite confident in the mid-term, mid duration, right? SPY should at least hold, and that gives me an opportunity to sell, contracts, okay, put options. So I see how, okay. So generally, I want to remind is that I usually don't sell contract in the first hour of the market because it's too volatile. I will do it after 1 hour, where the market is more stable, so called. Okay, like I said, early bird gets to eat the worm, but the early worm gets eaten by the bird. Okay, so remember, it goes both way. Okay, you want to eat the worm, but you also don't want to be eaten. So that's why personally, I will only start trading 1 hour into the market. Okay, so that's my personal take for today's stock market. So I see potential opportunity in Nvidia. I might sell one put option later because I still believe in Nvidia a lot, especially Jensen Huang. I will cover Nvidia soon, probably in the next few days or next week, because there's a lot of things to talk about Nvidia. Okay, not just the technical aspect, okay, not the Ruby, Vera Ruby, not about the transistor, the capacity, not so much on technical aspect because those you can learn from other people. I try to say something that other people never say, so at least there's some value for you all, okay. I try to give you my own perspective why I'm so convinced in Nvidia and why I want to sell. I've actually about 4 put options, if you notice. I think 4 or 5 put options on Nvidia and even 3 to 5 call options, okay. That's just how convinced I'm in Nvidia. And because you see Nvidia now is like 194 and it's down 1%, I think the premium should be quite decent, okay. Let me just try clicking. I think yours can see a bit, okay. So let's just go to Nvidia, the options there, okay. Hopefully you all can see. Can. Why it becomes middle of the screen? Okay, never mind, we just take a look, okay. So you see, let's just look at 52 days, example. Let's just look at 52 days, okay. So you see, let's say you do a put option on Nvidia, right? At about 0.2 delta, you see, it's quite juicy, right? Your strike price is 170. That means Nvidia must fall below 170 before you get assigned. And once you sell, you can probably get about $430 USD. Pretty attractive, right? You see? But like I said, usually when the stock price go down, the premium will be higher. Okay, but I have said before in my longer video, okay, always look out for the IV lah, okay. NVIDIA IV is high for a reason because it's a highly volatile stock. So higher risk will mean higher reward. So if you want to buy NVIDIA, you must accept it is actually a risky stock, okay. It's not a sure win stock, please. All stocks have risk one, especially NVIDIA. Actually, I want to be honest, NVIDIA is one of the higher risk stock, okay. But at this juncture, I just feel that there's huge potential in NVIDIA, and it can go even higher. That's my take. So that's why I don't mind selling a lot of put options. If I get assigned, I'm very happy. If not, I can always roll over. Okay, we will talk about rolling next time because some people ask me, what do you mean by rolling? Okay, and honestly, rolling, right? Some people think like it's just you close and then sell another one, which is true. And then some people think that you just accept the loss, then you sell another put option, further strike price, further expire in hope to recoup your losses. But actually, it's more than that. Like I said, there's a lot of nuances, small, tiny little bits of the option view strategy that people don't really talk about or dive deep enough. So I will talk about that more, okay, using my personal experience I share with you all. Why rolling, right, is a very powerful strategy, and it's not just about closing and then open to try to recoup your money. It's way more than that. Okay, can I? Okay, so let me see what else can we have a chat on. Wow, you see AMD, right? So swingy. You see AMD can down 8% in one day, So imagine if you are a beginner to options, and then you want to start trading options, I can assure you, option can one day down 20%, even more scary, okay? So 8% is quite a lot, it's almost like $40 deep, okay? If you have 100 shares, one day is down 400 already. People who are not seasoned in the market sure panic one, okay? Can I? Okay. Okay, so yeah, so I remember some people asked me if Intel has potential or not. So remember, Intel is a very high risk stock. So personally, I think there is some potential, okay, because US government involvement, they are chips producer. I think NVIDIA is also invested something in them, and they have a strong leadership now. I think there's a change of management, and he has done a great job to turn over Intel. Last time Intel was led by a terrible person. Now it's led by I think Malaysian. Someone told me the Malaysian. I think he jumped from TSMC today or something like that, right? Okay. So that's all for these options and stock component part. So I hope I managed to share with you my thoughts on why I really close options early and why options, right, really cannot be greedy. Like I said, the option view strategy is not that difficult to understand, okay, but to learn all the intricacy, all the tiny little details, bits and pieces of the benefit, pros and cons of the view strategy, it takes experience to really maximize it. It's like you have a tool, you have a knife, you only chop, but you don't know actually the knife can do many other things, like become a screwdriver, or maybe to cut your hair, okay, that kind of stuff. So that's why I would say the view strategy, if you use long enough, right, and you truly master it, I think it's one of the most powerful strategy. And only people with certain characteristics is suitable, because the view strategy will fail you if you are greedy. Okay, if you are someone who wants money fast, you cannot be patient, you don't want to stagger your contract, you want all in one day DTE, 0 DTE, or 1 month, that kind, right? It will bust your account. Okay? Okay, can. So the next couple of days we will still talk a little bit more about options, okay, because I know there's quite a bit of interest. So we will still talk about that. And then like I said, my position is all there, okay. I'm transparent to you, okay, so you all can see the position I hold. Of course, to be honest, I actually hold even more options, okay. I have other brokerage account like IBKR. I also do options there, okay. But the reason why I have more accounts, okay, is because personally, like I say, I know most brokerage account very safe. I'm not saying they collapse, your shares will be gone, okay. If brokerage account collapses, right, don't worry, most of the time, right, your shares will be held by a counterparty or third party, or is held separately from their assets. So it's a totally different thing. And this is a requirement by law. Most country, okay, I say 99% of the country in the world, right, the government, okay, their monetary authority or whatever, like their finance arm, right, will stipulate this, okay. Because imagine you buy shares and then let's say I join Tiger Broker, they hold it under their asset, they go bankrupt, I'm dead, all the stocks are gone. Okay, so all government, right, will require all brokerage account. In order to set up in your country, right, in our country, they must separate it. Customers holding must be kept separately. Cannot be parked under your own asset. Or you have a counterparty like DBS or whatever, up to you. Now the reason why I split a few accounts is because, right, if a particular brokerage account really collapse, let's say Tiger Broker, I know recently got some scandal or shit, right? If there is a day, Tiger Broker really goes down, bam, your stocks are safe, but it will take some time for them to, transit, you see, it takes some time for the government to work with them to shift your shares to another broker. That can take a few weeks or even a month. So if imagine all my holdings are in Tiger Broker, then suddenly I cannot trade already, all my holdings are there, how I sell covered calls, all this gone, and it takes time for me to get the shares out to another party. But whereas I split up into a few broker accounts, if let's say Tiger falls, okay, never mind, I just wait 1 month for them to shift my holdings to another one. But meanwhile, okay, I can continue to trade, continue to make money with my IBKR, Mumu, okay, even Standard Chartered Bank, but that one is more for buy and hold. So personally, my take is I try to limit just my own thing. I don't go more than 200k per brokerage account because I want to have flexibility and to have in anticipation for this kind of events. Okay? So like I said, most my holdings, my put options, call options are there in the first screen. You all can take a look. So not saying you must follow me, okay, but I just want to show you all my personal strategy, why I stagger, why I pick all these kind of companies to sell calls and puts on, and Nvidia, that kind. Can see my Nvidia puts, right? See, I have 4 Nvidia puts there. Okay? And you can see different expiry. So my IBK, I tend to do more shorter term, like 30, 45 days. Tiger sometimes longer, like 6 months, 8 months, that kind. I know the general guideline is 30 to 45 days DTE because that is the most juicy risk-reward ratio. But remember, things can turn against you. You don't want to take a substantial amount of risk to the point your account go bust. So that's why I rather take lesser premium, stretch it over a longer period of time, and to be on the safe side. Okay? Can I? Okay, can. So you all can see, you all got questions, can ask me, and then you all can see, some of you all want to see my holdings, right? Yeah, like I said, most of my options holding are on the first screen. Okay? And then, yeah, like I said, disclaimer, I hold even more in my other brokerage account. Okay? Okay, so now it's 9:46, so let's just chat for about 20 minutes more, then we will stop the stream. Okay? So any questions, feel free to ask me, or it's better you all ask me here rather than in the comments or messages, so I can one shot, answer your. And then if you all want a discussion, also good, we all can discuss. So it's also easier, right? Rather than you all drop messages, drop comments. Like that I can answer one shot all your questions. Also easier. So really, personally, my take is I've traded the wheel strategy for a very long period of time. Okay? And of all the strategy, all the option strategy, be it shredder, iron condor, butterfly, lizard, all these things, to be very honest, the wheel strategy is the one that consistently make me money. So that's why I continue to stick to it. Okay. Last part. Wait. Okay. By the way, Yav, hope you're having a good rest. Since you did a night call, hopefully not too tired. Okay, so last part, I just want to talk the last part, which is a little bit of pigeon investment beginning, okay? So I want to Yeah, drink some water first. Drink some water first. By the way, is my mic still okay now? Let me just do a quick mic test. Mic test, mic test. Okay. Okay, I think all is still good. All is still good. If anytime my audio or whatever not clear, please let me know. Okay. Okay. So last part I want to talk about is, in fact, it's the humble beginnings of how pigeon investment started. Okay, how I started this investment and how I quickly built a huge portfolio. Okay, I think some of you all know, watch some of my longer video. Okay, is that I managed to retire quite early in my 30s. Okay, and then one of the strategy is that I actually built a 1 million portfolio by age 29. Okay, so one of the key strategy I use, okay, especially those who are younger, okay, not financial advice, okay, one of the key element to really build a portfolio quickly is through leverage. Okay, whether you want to call it, yeah, it's leverage, basically borrow, okay, put on margin, okay. So I know leverage is a risky thing, okay, but if done correctly, right, it will accelerate your growth very rapidly. Okay, personal experience I just share with you, okay. So if you want to get ahead of life, okay, let's say you are a very average person or even poor person, okay, like me, I was poor last time, okay. In order to get ahead of life, if you just work a job, invest in an ETF, get about 9 to 10% a year, yeah, you still can get there, but probably maybe at 40 to 50 years old, then you probably can hit that $1 million, okay, to be honest. Now you want to do it in like 10 years, okay, 1 million, right? Most average people with average income, right, cannot do that realistically, okay. I mean, if you are lucky, you all in Tesla or all in Nvidia, maybe you wait for 5 years, you lucky, okay? You can do that lah. But most of the time, right, most people are not that lucky, okay. Even when I bought Nvidia or Tesla, right, I didn't all in also. I only bought like what, back then maybe I only bought like 100 shares, 50 shares, okay. Because realistically speaking, you want to manage risk, you won't all in Nvidia, right? Last time you won't all in Tesla, you maybe like 10% at most, then the rest you spread among other asset classes. So why leverage, okay? So I give you an example. Back then, okay, in my country locally, there's this thing called credit card. They call it balance transfer. You can loan money with your credit card, right, at a very low interest rate, like 1%, 1.5%. Especially, I think like 8 years ago, 7 years ago, that kind, right? Or 9 years ago. In the past, interest rate was very low. In fact, right, if I'm not wrong, banks even give you interest-free loans, you know. Like they give me balance transfer 3 months free, that kind. 6 months at a very low rate, that kind. So the EIR back then, the effective interest rate, maybe I pay about like, 1% a year, the interest rate, or maybe like 1.5, 1.75%. So you think logically, if you only need to pay interest of like 1% example, okay, but your dividend REITs, example, Singapore REITs last time very famous, real estate investment trust, they gave about 5%. So it's common sense, right? I borrow money, I only pay 1% interest, but I get 5% return from quite a stable REIT company in Singapore. Of course I will do that, right? I will just borrow as much as I can and then invest, okay. So I just, you think about it logically, okay, the same idea actually goes for property in the past, okay. How I actually came about this idea is because I see people invest in property, right? I use that strategy into stocks as well. So you see an example, let's say property, right? You buy a example, okay, let's just say example. You you buy a property for $800,000, okay, it costs 800,000, but your initial payment is only $200,000. You take a loan of $600,000. Okay, remember your loan is 600K, your initial capital upfront is 200K only. Okay, then the interest rate maybe 1 or 2%. Okay, maybe we see how. Okay, then let's say, okay, you invest 200K. Okay, like I said, your capital is 200K. If you take the 200K, right, you put in stocks instead. Okay, 200K in stocks instead. Let's say 10% a year. Okay, let's be easy, okay, because IWDA, SPY is about 10%. 200K invested, 10% a year is how much? 20K return. Okay, so with 200K capital, you get $20,000. Okay, So that is pretty decent, right? Okay, 20k, okay. Now, okay, let's say you have this property, 800k, right? Because you bought it for 800k. Okay, so property, to be honest, property return can be much lesser, maybe like 5%. Let's say you rent it out plus capital appreciation, okay, combination, you get like 5% a year. Now, 5% of 800k is $40,000. Okay, $40,000. So 40k is still more than 20k, right? Even though your return is only 5% a year, but the stock is 10% a year. So you can see your total return in terms of money, right, is still more, $40,000. Because, right, you have higher capital here because you have total, the amount you put in actually 800k, right? Technically 200k you buy, you loan 600k. So you have 800k worth of value for returns. That's why even with just a 5% return, you get $40,000. So you see the power of leverage, the power of lending money, loans. So same concept you apply to investment. So instead of having 100k, I get like $10,000 a year, okay, 10% return, right? I can borrow money, okay, I borrow another $50,000, or maybe make it easy, okay, I have $100,000, I borrow another $100,000 for my stocks, and then I get like 10%. So every year I'm going twice as fast as the other person. The other person only get 10k a year with 100k. Even though I only have 100k, right, but I take another 100k loan, so I get another 10% additional. So instead of just getting 10k return, I get 20k return a year. Even after paying the low interest rate, right? Maybe okay lah, maybe interest rate back then is 3% or 2%. I'm still will be up like what, 17k example. So you can see one person there, he's traveling at this speed, okay, 100k. But because I loan, I'm traveling at the speed with 200k. So I'm way much faster than that person. So in summary, in short, to get ahead of life, right, to build a huge portfolio in a short period of time, right, I just want to be brutally honest, okay, you have to take leverage. Okay, like me personally, I share you my story, okay, if I didn't leverage, I wouldn't be where I am today. Okay, so in order to manage leverage, you have to manage risk, okay, so be it you hold 2 jobs, 3 jobs, up to you, you find more sources of income. Like what, I used to work 2 jobs, 3 jobs, and then I do like trade cards, trade magic cards, trading card game to buy, sell, make profit. So with that additional cash flow, I'm more confident to take on more leverage. Okay, so hopefully that is a succinct sharing. Okay, so of course if you're already 55 years old, 50 years old, maybe leverage is not very ideal because you don't have that much energy to work extra jobs for more income, right? But if you're young, you're in your 20s or even 18, 19, right, people who are younger generally more energy, right, more strength, you can tank more. Someone nowadays, there's plenty of freelance jobs, you can have a full-time job and then you do part-time in your what, Grab delivery, or people call it Uber, DoorDash or whatever. Then you do some more part-time, be what, a card game vendor or you work part-time, doing selling drinks or whatever, or sideline business, that kind. So many opportunity nowadays, to earn extra income, provided you have the strength, the stamina, the energy to do it. So like I said, if you are still young, in your 20s or even 30s, right, if you have what it takes, okay, you have energy, you are good, you know how to manage cash flow, right, and you want to grow a portfolio fast, right, honestly, leverage is one of the key element. Personally, okay, not financial advice, okay, not financial advice, okay, but remember, leverage is a double-edged sword, okay. It can bring you up very fast, but it can crash you, okay. So people who are greedy cannot use leverage, okay. If you are someone who is prudent, you know how to manage cash flow, then leverage is a very powerful tool for you. Okay, to be honest, a lot of business people, businessmen, or even rich people continue to take loans because the interest rate is cheap. They can get a higher return. The reason why they are at the top, they are making so much money, is because they started with taking loans and leverage. That's why even them, right, they continue to use leverage. Okay, so remember, if you go and study all these people, right, 99% of the people who are rich, do successful business, right, all take loans one, all take leverage one. even people who go and open franchise, what Ya-Kun, Subway, okay, whatever, okay, all the 7-Eleven, okay, very likely they also take some form of bank loans, okay, bank loans, that kind, okay, because honestly, loans leverage, right, is really key to building a huge portfolio. So keep a lookout. I mean, not financial advice, something to consider, okay, because now we have a new chairperson, right, for Fed, right. I can't remember his name. He take over from Powell, okay. This person was selected by Trump, and Trump, you know, he loves low interest rate. So if the interest rate really start to tank, which I think could be possible in the longer run, it might be an opportunity to start, you know, thinking of, you know, maybe taking up some loans leverage if you can manage, okay. If you cannot manage, please avoid, okay. Like I said, leverage will get you there, get you ahead of life, but leverage can get you behind of life also, okay. So I hope that's a mini sharing on a bit of my PJ investment beginning, how I managed to build, you know, such a huge portfolio in a short period of time, okay. Because I never covered that in my longer video, because some people may find this part boring, you know, leverage, talk about leverage, you know, people may just want to see the quick summary on how I get to that 1 mil portfolio. So rather than, you know, going through all these tiny little bits, but during this kind of streaming, okay, it's easier to share, you know. I can just talk to you all, you know, just talk chit chat okay, you know, talk ha ha he and there. So that's why personally, I think leverage is really key, one of the key elements to get ahead in life, okay. So just share with you all my story, okay. If you're is something you want to consider, wish you all the best, okay. But please be prudent, please be careful. Like I said, leverage not for greedy people, okay. If you are someone who cannot control emotions, you know, you like to gamble, you know, you like to 10x your money, 20x your money, that kind of, please avoid leverage, okay. It will be your downfall, okay. Leverage will be your downfall if you're that kind of person, okay. Okay, that's all. It's already 10 o'clock, okay. So I know I started 9 minutes late, okay, but we will probably end stream soon, okay. So let's just talk about tomorrow, okay, next few days, okay. So same thing, my stream is Monday to Thursday, so for the next 2 days I will still be here 9 p.m. We will start at 9 p.m. GMT time zone. Time zone is GMT plus 8, okay. So 9 p.m. I'll be back here again, and then I will see you on tomorrow also, okay. So once again, I will continue to figure out the OBS, all these settings, the streaming, all these things. So hopefully I can make it more smooth, okay. And I know some of y'all want me to show you how to click certain button, how I actually make the trade, you know, the how part, what I click, what button I press to sell an option contract. Okay, I'm still figuring out that part, because when I try to right click now on my screen, it doesn't show you the steps, you know, it doesn't show you how I click here, how it pop up, you know, how the money arrives, that kind of stuff. So hopefully I get to show you that once I figure out, you know, we can do not just a live trade, but also the whole process of actually selling an option or selling a cash cover put, okay. We can do your Tiger Broker or IBK, but for now Tiger Broker is easier because it's more user friendly, to be honest. IBK is very complex, a lot of buttons, very laggy, very bloated, okay. So okay, that's all. Hey, thanks for tuning in for those, okay, and appreciate those who drop comments or chit chat with me, okay. Like I said, I always value a quality conversation, okay. Those who just drop by, CC a bit, hear some parts, I also appreciate, okay. But you have a chit chat with me, I appreciate it even more, okay. Chit chat, ha ha he, okay. So thank you so much everyone for coming in, okay. Especially Yaf71, really happy to see you again, you know, really happy to see you again. Hope you had a great day, you know, things are doing well for you. And like I said, I also hope you continue to make money as well from the stock market, you know, have a better life as well, that kind. Okay, hope your Cai Fan was good, okay. And also Blake 34, okay, thank you so much for dropping by to say hi also. Okay, so that's all. I see you all tomorrow, okay. Take care, goodbye.